thank you very much for the invitation to take part in this event. It's really a nice opportunity for me to share with you some observations we've made at the HOI in the last couple of years in the area of inclusive insurance regulation. So thank you very much, and I'm very glad to be here for the second time in Macedonia. So for my presentation for today, I just wanted to briefly talk about some inclusive insurance fundamentals. I will keep that part very short because Klima and Vladimir already nicely summarized the most important characteristics of inclusive insurance. And then I would really like to focus on the role of the insurance supervisor or regulator in promoting access to insurance. And I will just give you some ideas of what are the current trends and some reactions from supervisors in inclusive insurance. But before I start, let me just say two sentences about the Access to Insurance initiative for those of you not familiar with this initiative. It was founded in 2009, and we are the implementing partner of the IIF, the International Association of Insurance Supervisors on Inclusive Insurance. And our mission is to strengthen the capacity and understanding of insurance supervisors to facilitate and promote inclusive and responsible insurance, so that in the end, more poor, vulnerable people have access to good quality insurance products. So we work very closely with the IIS, as said, and when they develop standards for the insurance market, our role is to make sure that they also consider the inclusive insurance perspective in their guidance and standard setting processes. So as said, I will maybe just skip that slide. I just wanted to highlight that inclusive insurance is a broader term, and it includes microinsurance. I usually refer to inclusive insurance because this is aimed at people that are excluded from access to insurance for very different reasons. Not only because they can't afford it, but also because they might live in rural areas or work in the informal sector. So there are many reasons why people can be excluded from the access to insurance. What is important and what applies to either micro or inclusive insurance is that it's not just a scaled down version of traditional or classical insurance, but it has some specific features and characteristics. Let's maybe start, just very briefly, some characteristics of inclusive insurance. Let's maybe start with the target group of inclusive insurance. So there is not the specific inclusive insurance customer. As said, there might be various reasons why these people don't have access. So as said, they work in the informal sector, or maybe there are no products available that meet their needs, or it could be that they just don't trust in the formal financial sector. This is something that we can observe in many developing countries. When it comes to products, it is important that they are appropriate to the needs of the customers and affordable. So I will come to some more features of the products later in my presentation, but just to highlight that they are all based on insurance principles and funded by premiums as conventional insurance, and they run in accordance with generally accepted insurance practices, so to say with the insurance core principles. What is very important when it comes to inclusive insurance, and that was also mentioned already, are distribution channels. So there are a wide range of potential distribution channels. What is important, they must be easily accessible. That's why we found lots of aggregators when it comes to inclusive insurance, so that institutions or organizations that already have an existing relationship with the customer also provide inclusive insurance products. The same applies to providers and intermediaries. So when it comes to providers, we see a wide range of providers. There are the typical multinationals like Allianz and all these big companies, but we also have dedicated microinsurance providers in some countries, for example, in the Philippines or in Brazil. There we find insurers that only sell microinsurance or inclusive insurance products. And also intermediaries, as I said, play a crucial role when it comes to inclusive insurance, and they often have a much wider responsibility. So they are not only like selling the product, but they also are responsible for claims processing, for the information, for really explaining the product and so on. Okay, so I think we all agree that there is a great potential for inclusive insurance, but still the penetration rate, as we saw, remains very low. And I just wanted to show you this graph, which I think nicely summarizes what are some of the reasons for this protection gap that we can observe. It's from the Geneva Association. And if we look at the demand side, especially in developing and emerging countries, affordability is an issue, and then awareness, trust, culture can be constraints for market development. And on the supply side, and this is where I wanted to, what I wanted to point out is if we look at the supply side, constraints might be that there are high transaction costs for inclusive insurance, or insurers do not see a business case and are therefore reluctant to operate in the market. But what you can also see here on this slide is that especially in developing and emerging markets, institutions, which are the supervisors, play a crucial role. So they can unintentionally hinder the development of inclusive insurance market, or they can incentivize the industry and they can create a favorable environment for inclusive insurance. So this is what I would like to, my next point, I would like to come to talk about these potential regulatory barriers that might hamper the development of inclusive insurance markets. And maybe just to remind us, what is the role of the insurance supervisors? So generally, I think that's clear to all of you, to protect the consumer. And this is especially important when it comes to inclusive insurance, because we quite often have first-time consumers. They are just not familiar with how to use these products. So it is very important that they are well protected, and that's the core mandate of each supervisor. But on the other hand, many supervisors also have a mandate in market development. So they also want to create the market, and they can, for example, by allowing innovations or so, also incentivize the industry to operate in this market. So what we always say is the important thing for inclusive insurance is a proportionate approach to strike a balance between protecting the consumer to help expanding the market in inclusive insurance. This is not super easy for the insurance supervisors, but we see that in a couple of jurisdictions, people are making changes to their regulations to help enhance access to insurance. On this slide, you see that currently there are 21 inclusive insurance or microinsurance dedicated regulations in place. It's maybe not completely up to date. It's from 2018, so there may be some other countries already working on the topic. But when we go back 10 years ago, when the HII was founded in 2009, there were only 5 or 6 regulations in place. So we see that this really evolved over time, and that there are more and more jurisdictions recognizing the importance of having a dedicated or a specific regulation in place to help developing the market. Of course, these regulations all follow different approaches, and there's also no one size-fits-all approach. How this, and it's also not, I did just copy a regulation, so it's really up to the market. You have to do a market study. You have to see what are really the barriers in regulation, and then work on an appropriate regulation for your jurisdiction and for your country. But just some approaches that we observe. So in many or in most of these regulations that currently exist, what we find is a definition. So what is meant by inclusive or microinsurance? It can be qualitative or quantitative. Usually it defines the target group. It defines some characteristics of products, who can underwrite microinsurance or inclusive insurance, and how they are distributed. So these are very common approaches. Then when it comes to licensing, the most common approach here is the business line approach, which means that microinsurance or inclusive insurance is offered by the traditional insurance company just as part of a broader portfolio. But in some countries, we also have an institutional approach in the regulations, which means that there are entities that are licensed as a microinsurer, like in the Philippines or in Brazil, for example. And what is always part of these regulations is, of course, the requirements for consumer protection. As said, we have very vulnerable customers. So this is a very crucial part of these regulations. So we see that many countries are working on this, which is great. And I just wanted to give you some examples how this proportionality in practice can be applied, or how it is dealt with in some of these regulations. This is really just a snapshot. If you're interested in more examples, I would like to recommend this publication that was published already some years ago, but it's still very relevant because it looks at many of these microinsurance regulations or inclusive insurance regulations and really just highlights what they include. And I will give you just some very common areas where proportionality is applied, like, for example, allowing more types of risk carriers. For example, in the Philippines, we have a dedicated microinsurer that then also has a reduced capital requirement. So this only applies to microinsurance only companies. When it comes to product development, I think that was already mentioned. It is very important, and this is also something that we find in these regulations, to have simple products. They must be easy to understand. Some jurisdictions even require to have the relevant information in only one page. Then distribution, the supervisor can allow for a wider range of distribution, also non-traditional distribution channels, also digital distribution channels, like, for example, a mobile phone. The premium collection should also be a bit more flexible, if possible, and adapted to the frequency, or adapt the frequency of payment to the cash flow of the target group. The claims timeline, this is also an important point, and it's also in some of the regulations, they set a shorter timeline for claims payment when it comes to inclusive insurance. This is because quite often these people don't have savings, so they really need to receive the payout of the benefit as soon as possible. Also, shorter resolution timeline for complaints handling, we can find often in these regulations. And to incentivize also the industry to operate in the market, as I do, wider range of distribution channels, but also faster product approval for microinsurance products, or lighter regulatory fee structures when it comes to these products. And what we also see often in these presentations are complementary measures, like the responsibility of the insured for awareness creation, but also educating the client how to use the product. Okay, and this already brings me to the last slide of my presentation, which just highlights some of the trends that we observe in inclusive insurance. I just wanted to highlight two of them, those in red actually. So one, digital technologies. Let's maybe start with this one. This is a big trend and a huge topic also for A2I. It was our annual theme last year, so we've done quite a lot of research on the topic and organized a couple of events on that. All these new digital technologies can really help improve the access to insurance. It can help to easier access people, or to better also understand what these customers need by using these new technologies. It can definitely help to bring down transaction costs. So there are lots of opportunities these trends or this trend brings, but there are also for the supervisor some challenges. So you can help as a supervisor to incentivize the use of InsurTech, these new technologies, by, for example, allowing online contracting, or also allow a broader range of intermediaries, as said, through mobile phone, for example. So they really play a critical role when it comes to these new technologies, especially when we look at these new risks that can also emerge through the use of these technologies. So just thinking about data protection, and that quite often we have parties involved in the process of the insurance, or in the whole insurance process, we have parties involved that are non-traditional financial players. So they may be supervised by other insurance supervisory authorities. So there is a real big need for communication between these different supervisors, for example. Okay, and for the second trend I wanted to highlight is index-based insurance, as I know that this is also a very important topic here in the region. And it's recognized as a way to remedy some of the challenges that we can observe in inclusive insurance, especially when it comes to bringing down the transaction costs, but also here, in many jurisdictions, there's no regulatory recognition for index-based insurance. So this is a big challenge for supervisors as well. And the IIF just published a paper on this, how to deal with index-based insurance. And I also don't want to say too much because I know there's another presentation on index-based insurance, and maybe there will also come some questions when it comes with respect to the regulatory aspects. So yeah, thank you very much. And if you have any questions, just let me know. Also in my presentation on the last slide, you will find some links to publications for further reading. And on our website, of course, there is lots of information on the topic.
Okay.
So.